Welcome back, everybody, to my channel where you subscribe for daily videos on everything going on in cryptocurrency. In today's video, we're going to talk about a little-known technical pattern or on-chain indicator that preceded the most brutal Bitcoin crash in history by almost exactly 1 year. And this same pattern is showing itself again. Let's go ahead and get started. Alright, so first I want to show you this very mysterious-looking chart. In just a second, I'm going to explain what it is. But I want you to take a look at this chart in slow motion. So check this out. This chart right here has all of a sudden death of the pattern playing out. Now let me explain what this chart actually represents because there's a secret code in here. Okay, so what this chart represents is basically the standard deviation of Bitcoin's logarithmic returns. It's a mouthful, I know, but let me explain it another way. What this chart shows us is how volatile Bitcoin is over time. Basically, you can see that this blue line is fluctuating between 0.7 and negative 0.7. That doesn't mean anything to you right now, but just take a look at these big spikes. These spikes show us periods of increased volatility in either direction, okay? Whether it's upwards or downwards, the spikes represent times of extreme volatility. And if you look closely, you can see that there are multiple spikes of this pattern. But there's two spikes that I want to focus on specifically. The spike that begins around August 2021 and ends around September 2021, and then the more violent spike that occurs around November to December 2021. Now there are more spikes than just those two, but those are the ones we're focusing on because the smaller spike happened before the all-time high, and the bigger spike occurred during the crash. So what we have here is a pattern that showed increasing volatility leading up to the all-time high, and then extreme volatility as prices crashed. Okay, so that's what this chart is representing, and this chart alone is not the full story. We need to go back in time to make the connections. So here's the weekly candle chart of Bitcoin over the last 3 years. Okay, so we're zooming out a lot here, but there's something important that I want you to see. Let's go ahead and mark this area right here with a box. So this area right here represents March of 2020, when Bitcoin went from around $6,000 to $10,000 in a very short period of time. Then let's go ahead and mark this area with a red box. This is the rally up to the all-time high, followed by the massive crash. So what I want to do now is show you the death ball chart from both of these areas. Let's go ahead and zoom in right here. Now let's compare this pattern to what's happening today. So here is Bitcoin's death ball chart right now. Let's go ahead and compare it to the death ball chart from the previous bull run cycle. So here's the death ball chart from the previous cycle. Here's the death ball chart from this cycle. What happened again? Will we see a repeat of what happened in 2020 and 2021? Will the volatility lead up to a significant move and then coincide with a significant move? Well, if this pattern holds, then the answer is yes, it will happen again. So based on this data, we can expect the volatility to increase, and then Bitcoin's price will either continue to move upwards, towards new all-time highs, or downwards towards new all-time lows. Now let's make this even more interesting. Let's add another layer of analysis. Check this out. So I have Bitcoin's realized volatility in blue compared to its historical volatility in black. And what's interesting here is that this is an example of realized volatility, aka on-chain volatility, being able to predict future volatility. Okay, so when you look at the blue line, you can see that there were spikes in realized volatility before the spike in historical volatility. Okay, so this is a way to potentially get ahead of market structure moves by looking at realized volatility on chain and then comparing it to historical volatility. Now let's zoom out and take a look at the big picture. Take a look at this. This chart is extremely interesting because we have this purple line representing Bitcoin, its realized volatility since the beginning of time. And then we have this black line representing Bitcoin's historical volatility since the beginning of time. And what's really interesting about this chart is that we can clearly see that the realized volatility is consistently lower than the historical volatility. Now, I don't know why this is the case. If any of you know, please let me know down below. But what does this mean? Well, historically speaking, whenever the realized volatility gets too low compared to the historical volatility, the result is always the same. Bitcoin experiences a shock move, okay? And that move usually takes the price back to where the historical and realized volatility lines converge. So take a look at this. When the lines converge here, boom, we see a sharp move in price upwards. And then, when the lines converge here, boom, we see a sharp move in price downwards. Notice that each time the lines converge, they converge near a major support or resistance level. In fact, they converge at Bitcoin's all-time high as well. And right now, the lines are converging again, which means Bitcoin could be due for another shock move. Let's put all of this together and recap what we've learned. First, the standard deviation of Bitcoin's logarithmic returns, aka the death ball, creates spikes during periods of extreme volatility, and those spikes show us that volatility is increasing, meaning a significant move is coming, and then the magnitude of the spikes show us the magnitude of the move. Okay, the larger the spike, the more likely it is that the move will be large as well. Second, realized volatility often leads historical volatility, meaning that we can potentially get ahead of market structure moves by looking at on-chain volatility. And third, Bitcoin's realized volatility, compared to its historical volatility, suggests that Bitcoin is due for a shock move since the lines are converging again. So what does this all mean? Well, simply put, we're seeing signs everywhere that a large move is coming. And it appears that it will either be upwards towards the all-time high or downwards towards the all-time low. So what does this mean for you? That depends on what you're trying to accomplish. Are you looking to buy the dip or sell the top? Either way, this is why I like to analyze the data and share it with you guys, so I can stay ahead of the game. If I need some help, please smash that like button if you got some value out of this video. And if you haven't already, make sure to subscribe to my channel where you get daily videos on everything going on in cryptocurrency. With that said, we'll see you tomorrow.